Hello, Sebastian here from Twin Peaks. I would now like to show you an interesting function in the SidiFootprint, which is really only available here, and that is the market memory zones, also known as the MMZ area. This is our own unique development, and yes, we believe it is a very helpful tool for displaying areas of strong market reactions. By default, this market memory zone is defined in such a way that whenever the POG is within a shadow, the entire shadow in the zone is also marked as a zone. This always depends on the chart that is used. We have special chart types in some of our systems where this is very interesting for us, but of course also for some footprint and zone traders in the area of tick charts, Uni-Renko, and similar can be very exciting. We are now here in the 5-minute chart, but here it is actually also very helpful, 2001, what is happening here. So we have a zone that forms here because the POG is outside the candle body and we have this rejection here. We can still filter the whole thing and we can say the minimum volume, i.e., how much volume must be present in the bar as a minimum. 1 bar duration, i.e., how long does the whole thing have to run? So quite exciting for tick charts and the like. Then the max wig in ticks, i.e., how long? Can this rejection be at most? How big must it be at least? And for how many bars does this zone remain active? As an example, if we have a very, very long rejection here, and that is displayed in exactly the same way as this short one here, but maybe I don't want that at all, but I would like to say, okay, we have the max wig in TX. Let's set it to 15 and the whole thing should then only be valid for 5 bars, for example. Then I press F once on the keyboard, then the whole thing is recalculated. And then we also see immediately that only where these conditions are met, i.e., where we had a maximum of our wig length, as here, for example, the whole thing is then formed. And then we only have this zone active for us for the 5 bars. So this is also a very exciting function. And we can refine the whole thing a bit here, because we can also say, as a rule, in the shade, but we can also say that it should be in the body. I would now have to recalculate once with F so that we can see everything, but we can switch that just as easily. We can also say whether the POC should be coherent or divergent. This means if we want to have a negative POC for a bearish bar in relation to the delta, then this would be coherent. Or if the POC should be positive for a bearish bar, then this would be divergent. With off, this is not taken into account, 2001. And so we also have very exciting setting options here. The same as with many other functions is here again, break zones at session end. So we want to carry the zones over to the next day. If they have not been broken, yes or no. In addition, break zones at same price simply means if we run this zone once up to here and back again, it should still be considered broken. Otherwise, here again are all the visual settings, how the whole thing should be presented to us. Use and so again, a very exciting function here in the SidiFootprint indicator to have an advantage in trading here in the footprint trading area. In the next video, we will take a look at the volume profile section here on the right-hand side. See you soon.